Another week in late October, inventory is rising as buyers are at a total standstill. It's been 8 weeks since mortgage rates spiked over 6% and 3 weeks since they crossed over 7%. Everything is frozen. Normally in the fall, inventory would be declining each week, but especially in places like Texas, inventory is still climbing. In fact, in much of the country, inventory is not climbing. Nowhere, though, is it really falling like you'd expect this time of year, but it's just that Texas looks particularly bad. As a lot of new construction is finally finishing and adding to the active inventory there. Anyway, we'll look at all the inventory and pricing trends today. Every week, Altos Research tracks every home for sale in the country. We analyze all the pricing, the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos market reports with your clients, your buyers and sellers, now might be a good time to step up. Go to altosresearch.com, book a free consult with our team, because everybody is worried about what's happening right now, and they need you to help them see clearly. The data we cover here in these national videos is available for every zip code in the U.S. So join us and dive in. I'm Mike Simonsen. I'm the CEO of Altos Research, and here's what the data looks like for the week of October 31st, 2022. Happy Halloween, everybody. There are now 577,000 single-family homes active available on the market. That's up 5,000 or so from last week, almost 1%. 1,000 of that gain is from Texas alone, which doesn't show any signs of plateauing yet. Texas is actually an expensive state for taxes, which ironically is one of the things that keeps the market there more healthy in normal times. But because it's more expensive to hold real estate, you get more turnover, therefore more supply for buyers. So we have more sellers, we have more new construction. That long delay during the pandemic is finally getting completed. And we have fewer inbound immigrants from places like California. So that's a recipe for Texas to be the hardest hit state in this correction cycle. Nationally, we have 40% more inventory than we did last year at this time. And with each week up 1%, we're inching closer to 2019 now. We still have 38% fewer homes on the market now than we did at the end of October in 2019. But that gap is closing by 1 or 1.5% per week. So suddenly it seems like this market, if it stays frozen with rates over 7%, we could get close to those 2019 inventory levels in the next year. What a surprise that is. Next week, Wednesday, November 8th, we'll have our monthly hour-long Altos Research webinar. In it, we'll deep dive into all the factors driving inventory, all the latest trends we can see. We'll also take time to look at the local data. We'll look at Texas, but also other parts of the country which are not seeing inventory climbing particularly much. They're still at the pandemic crisis lows. So that's next week, Wednesday, November 8th at 10 a.m. Pacific. There's a link to register for that in the description below. These are limited to 1,000 attendees each month, and we have way more than that register to join. So click that link now to reserve your spot. We can get an early proxy for sales rates by watching the pendings cycle. So this week we saw a 2% drop in the homes in contract, the pendings, week over week, to only 340,000 single-family homes. While the active inventory increased by 1%, the pendings decreased by 2%. So in this chart, the dark bar here is the count of the single-family homes in contract. That's the dark bar in a given week. And you can see how rapidly fewer of the homes each week are in contract. And it's 27% fewer than last year at this time. The light bar here is the active inventory for reference. So you can see the active inventory is climbing in November almost, while the count working their way through the contract process is rapidly declining. With new listings, there aren't a lot, but sellers are holding back nearly as much as buyers are. But if you look at the dark red line here, that's this year's curve of the new listings volume each week. It shows us with fewer new listings each week than previous years, but not a lot fewer. So 57,000 new listings this week. And most years are about 10% more at this time of year. So a little fewer new listings. And as I've been saying, this one of the reasons is that there's no huge tsunami of new listings coming, but it's moderating a bit. Some of the new listings are new construction that's long been delayed during the pandemic. And so in places like Houston, that's where a lot of inventory is coming from, like new homes are getting completed and available for sale. If the new listings count climbs above previous years, like you can see the dark red line did earlier this spring, like that's a bearish signal for me. If it falls to even lower percentage of recent years, that will be sellers holding back and maybe keeping a lid on that total inventory growth. So it's something to keep an eye on, especially as we pass the holidays. So it's moderating a little bit right now. Home prices ticked down this week, as they have been pretty consistently since early July. The median price of single-family homes in the U.S. is now $425,000. That's the dark red line here. Expect this number to be closer to $400K at the end of the year. And then it's that January-February period where home prices usually resume a jump for the spring. That's what's going to be telling for 2023. The median price of those newly listed homes is $379,000. That's also down, as is normal, totally normal for October. Sellers are adjusting to the current lack of buyer demand, but they actually don't seem to be showing much urgency yet. The median price of the new listings, that's the light colored line here. That's going to keep ticking down each week through the end of the year. But for some reason, it's not panicky dropping. So meanwhile, though, price reductions have not abated. The homes that are on the market are sitting, and they're adjusting their prices to face the fact that the buyers need to see a bargain when mortgage rates are over 7%. This week, almost 43% of the homes on the market have had a price cut. That's up again from last week. And you can see how the price reductions, that curve started surging when rates jumped over 6% in early September. That's the dark red line here. You can see it, its inflection point as soon as rates jumped over 6. So the fact that this curve hasn't topped off or started declining yet, like most years, it's a bearish signal for home prices on transactions that will close in the future. So like inventory, this is actually highly regional, but there are a lot of markets where more than 50% of the active stock has had a price cut, and that's really slow. The dark red line, as I said, is this year, and you can see it's still climbing, while normally other year curves start curving down as the market cleans up all the loose ends before the holidays and then resets after January 1. As it stands right now, this is a big red flag for 2023. Next week, Wednesday, November 8th, as I mentioned, is our webinar, monthly webinar. So there's a link to register for that in the description below. These are limited to 1,000 attendees. So we have way more than that who want to join us each month. So click the link now to reserve your spot so that you can join us. As always, if you need to get the local data for your buyers and sellers right now, people who are wondering what to do, you should join us at Altos. Go to altosresearch.com. Book a consult with our team, learn how to interpret the data, the crazy market data for the people who need it right now. I look forward to working with you. Okay, that's all the time we have for this week. More next week.